All right, good day, traders. Today we're going to take a look at a couple of stocks in the healthcare sector. First one is GILD, the other one being CAH. And we found a couple of potential bullish ideas starting around August 27th and August 28th. GILD having a little bit longer trade hold time into 9/18 or around 23 calendar days. CAH a little bit shorter, lasting about a couple of weeks. You see here GILD has had an 80% win rate over 10 years, so a little bit more data there comparatively to Cardinal, but a higher win percentage on Cardinal, 86% win rate over 7 years. Both have averaged a profit in dollars, about $200 to $250 per 100 shares. And you can see on each of these, we have relatively low drawdown over the history or life of these two trade ideas. And you can see the percent gain on 100 shares since inception of these two historical ideas. So last week we did an analysis on CME and CBOE, the two power exchanges, Chicago Merc and Chicago Board Options Exchange, respectively, and those ended up being nice trades to the upside if you took bullish positions. So let's take a look at these two ideas in the healthcare sector on a daily chart and technical perspective. So we'll start here with GILD. These channels here indicate areas of long-term support and resistance or price structure. You see very clearly here on a weekly chart of GILD that we are at long-term support. We're trading into today. So we are a little bit weak today on GILD. So there's a couple of ways to potentially enter this market. Is A, wait for the market to come back down and pierce a little bit further into this support structure area right here. Notice that we are at 786 support around the $66 area. A more conservative entry method would be to possibly wait for further confirmation, which would be a break of this trend line going back to July. So we don't have to watch tick by tick price action all day, every day. You can see we simply just set a price alert here around the 66 half area. And if we do continue to trade weak or trade to the downside into this area, we can trail our price alerts further down until price does indeed break this trend line resistance. We would tuck our initial risk down here somewhere around below the 62.60 area if we do get confirmation to go long. Now, if we take a look at CAH, it's not as weak as GILD. Again, we've got this long-term support down here into the 47, 48 area. You can consider go ahead and nibbling long here as long as this trend line support holds around the $49.50 area. Notice yesterday we had a nice bullish candle bounce at this 50% retracement level of around $49.40. I think low risk trades can be considered with risk down here below the 47, 46 area. So we're only risking about $3 or $4, targeting up here around the 58 to 60 area. So we're only risking $3 or $4 and looking for targets of around $8 to $10. So that's what we're looking at on CAH. Now, if we want to compare this even further to XLV, the healthcare sector that tracks healthcare stocks, this is where we're trading right now on XLV. Seasonally, XLV has been nothing exciting. In fact, it's actually lost an average of 0.25 to 0.3% on average, but positive results have been seen 55% of periods over the last 20 years. So we do have a little bit of catch up to do on CAH and GILD. Do me a favor, reply back, let me know what you think on these two picks and or which ones you think will display greater strength over the next few weeks. So those are a couple ideas for you to think about. Good luck, good trading, and we'll see you on the next update.